the Taiwanese index is the outperformer this morning, almost 2% higher.
Questioned the conflict of interest of SEBI chairperson Madhavi Puri Buch.
Support for the Nifty is the sort of low we had the day before yesterday, 24,079.
HDFC Bank, that's the stock to track, and the next couple of sessions as well.
This looks like some real big conspiracy to me.
Nifty starting, I think, about 0.2% lower.
We believe this bout of volatility may need to continue.
All the allegations they have denied, and I would completely believe them.
It's been a trend over the last few sessions where PSUs have reported results that have mostly disappointed the street.
There is more margin pressures to come for the sector in the coming quarters.
Markets are recovering. We're back in the green.
This facility will house about 5 gigawatt-hour of pack manufacturing.
A 200-point recovery from the lows is what we're seeing on the Nifty.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, that is the day so far. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. This is the last hour to trade here in Closing Bell. I'm Prashant with my colleagues Rima and Surupi here in the studios. Nigel is joining in from the newsroom floor. Guys, hi, good afternoon.
Hi, good afternoon. Folks, I guess resilience is a word that comes to mind yet again for this market.
Okay, and at the session lows, the markets were down 150 points. The Nifty was close to 24,200, and now we're at 24,400, up 50 points.
Absolutely, it's for 40, 30, 50. But yeah,
solid rebound.
It's absolutely, and something we were talking about in the morning as well, that globally things on Friday looked much better. If you looked at, and we sort of put out values on, for example, the S&P, the Nasdaq unchanged. You look at the week on week unchanged. I'm talking about last Friday to the prior Friday. You look at the currency cross, which caused the most trouble, the dollar JPY unchanged. So over a 5-day period, things really settled down into that Friday. That is the last one. And then, of course, over the weekend, there was this Hindenburg news and noise and all of that stuff. And it was perplexing why many were saying that it will cause a big reaction. It's not. I mean, I don't think the initial reaction, would you blame it on that? I'm not so sure. But even then, we've recovered off the lows, as you said. And, banks are outperforming. It's very clear. So Axis Bank, Shriram Finance, HDFC Bank, these are the 3 top gainers, banking gainers, as far as the Nifty 50 is concerned. It's vibrant, broader market, stock-specific, single stock action. Lots of news-related names are moving between 5, 10, 15%, which we will touch upon in just a bit. And if you want to look at sectors, real estate, consumer durables, and metals are the ones which are doing the best. In terms of levels now, on the Nifty, you got the 61.8% retracement of the decline, the fall from the all-time high to the recent swing low. And that's the golden number, 24,625 is what we need to take out, about 200 points away from now. That also, by the way, coincides with the upper end of the gap area. And Bank Nifty resistance is the 40-day exponential moving average, which is 51,055. Both these values, of course, are as if yesterday's close, it would have moved a little bit, but not by much. So that's where we find ourselves at. Surabhi.
Well, Prashant, absolutely. I mean, you've got mid-caps that are doing well. A lot of the PSU stocks, they've kind of recovered as well. And some of them, like RVNL, are once again having a pretty decent session. That's the mid-cap index. The recovery continues. Some movers and shakers. Just want to sort of name some stocks because some of this is also based on earnings. And we've got very sharp reactions. Inox Wind, you'll hear more about the stock as we go forward. It's been a blowout reaction to what looks like a really strong quarter for the company, 15-16% up over there. Voltas. The market has absolutely loved what Voltas has delivered on both of their big segments, the cooling side of it as well as the electromagnetic projects. Jubilant Food, CE Infosystems, Suven Pharma. So we've got a string of positive hits on the earnings front, and that seems to be working very well for the market. But again, I mean, you have some of the negative outliers like Balakrishna and Honasa. So it is very, very granular also as we're coming to the end of the earnings season. The advanced decline ratio is still negative, but for what it's worth, Nigel, there's green back on the screen at least for now.
Well, that's right. An HDFC Bank, that's put a price tag to its wicket, actually. That one is, putting on that 0.5 to 1%, or the next couple of days could be big for it because of their MSCI announcement as well. And anticipating that, actually, the stock has been a relative outperformer in the last 1 week or so. The Nifty is still a little bit lower, while HDFC Bank actually is high. So that's holding one end up. And with HDFC Bank trading with a gain of close to 100%, explains why we have the Nifty Bank that's up more than 200 points. As we speak. Mitesh Thakkar is waiting by, so let's go across to him. Hi Mitesh, good afternoon, good to see you win. Well, what's the view on the markets from here on? The Nifty is up, but we've come off a little bit from the top. The good news though is that buy on dip strategy continues to work on the Nifty.
So Najat, I think, what has happened is that we made some pivot low around 24,000 on the Nifty and around 49,500 on the Bank Nifty. But I still haven't got a sign of a bigger reversal. Though the good thing is that, as you rightly said, we are not declining, and therefore, the buy and dips is working. Now, if you can get past 51,000 on the Bank Nifty, I think that should enable the Nifty to get past today's high, which is roughly about 24,470, 480 zones. And once that happens, 24,650, 700 areas could be visited, which is also the retracement area and the upper end of the gap. I think Prashant also highlighted that a couple of days back. So the overall view is more of, choppy with some upsides. But in case the final levels on the upside are cleared, which is 24,700 on the Nifty and about, 1,800 on the Bank Nifty, then I think we are in for a smooth ride on the upside. Till then, I think it will be a choppy market. Which still has some danger of, coming down from higher levels. So for the time being, I think trade with stock-specific biases. I have one buy and one sell. Federal Bank and banking names are today are looking better in the short-term chart. So Federal Bank is a buy. Keep a stop at 197 or maybe 196.5. Look for targets of 210. And FMCG after a long time is showing signs of profit booking. So Britannia is on the negative or the sell side. Keep a stop at about 57.15 here and look for targets of 5,500.
Okay, let's get to some individual stock-specific action. The CPSE index is under pressure today. Remember, most of the PSU banks are weak in trade. So whether it's State Bank of India, Union Bank, Bank of Maharashtra, across the board, PSU banks are under pressure. But there is one stock which is actually doing very well, and that's SCI, Shipping Corporation of India, 7.5% post the Q1 numbers. Vamakshi joins in with more on this. Vamakshi.
Well, absolutely. It's a good set coming in from Shipping Corporation of India. Revenue stood at 1,514 crores. This is an uptick of almost 26% on a YOY basis, and all of the segments have been contributing to this revenue growth, especially bulk carriers, because the revenue out here has nearly doubled for the company. Liner, tanker, as well as technical and offshore segments have also contributed. They've seen a double-digit revenue growth as far as this quarter is concerned. EBITDA margin for the company came in at 33.7%. This is an uptick of almost 341 basis points on a YOY basis, and that has come in because cost of services, which were up nearly 22%, other expenses up 5%, and employee expenses, of which were up nearly 12%, have lagged the revenue growth. So expenses are lagging revenue growth, and as a result, the margins have improved for the company. We're also seeing that this improvement in the margins is seen across all segments, barring the tanker segment. The most improvement has been witnessed in the liner segment, wherein the margins have actually increased by 4,188 basis points on a YOY basis. Resultantly, we're seeing a nearly 40% uptick in the EBITDA. EBITDA has come in at around 510 odd crores, and the net profit for the company has nearly doubled to 287 crores. So good set of numbers coming in for Shipping Corp, and as a result, the stock is surging in trade today.
Dipan Mehta, thank you, Vamakshi, for that. By the way, keep your eye out on RateGain, because RateGain is slipping post its Q1 numbers. The company's revenue growth on a quarter-on-quarter basis is just 1.6%. On a year-on-year basis, the revenue growth has come in at 21.2%. This is lower than the growth rate that we've seen in the past, but remember, it's in line with the company's guidance. The company's guidance is that for this year, they will see an organic revenue growth of 20%, and the company has delivered 21.1% year-on-year revenue growth. Margins have come off on a quarter-on-quarter basis by more than 200 basis points, so the stock is a bit subdued in trade, and I think RateGain is a stock which has also done pretty well over the last 2 years, riding in on that travel boom. It's a SaaS player.
I think we've been waiting for them to do an acquisition. They raised some money.
Got a lot of money.
A couple of quarters back. And it was done with the purpose of an acquisition, but they've not been able to close one. And, I remember what they said was it'll be a meaningful acquisition. As you said, organic growth guidance is 20%. But overall revenue growth, including that sort of acquisition, which was supposed to happen, which has not happened, was supposed to be much higher. I mean, I think they sort of talked of numbers north of 50%. But, I mean, I think the street is waiting for that, but it's not fructified so far, at least. 791 or so. A bit of a knock coming through on rate gain.
Dipan, SCI, Vamakshi was telling us the internals of the numbers and rate gain. Again, this is a stock which has done very well. The cash in the books, at least as of last quarter, was more than 1,000 crore rupees. It's a rich, cash generating company. How would you assess the Q1 numbers?
Yeah, good afternoon, Rima, and thank you for having me on your show. RateGain is a company which we have had our eye on. It's quite a concept kind of a stock, and we are positive on the travel and tourism business as we have. And this is a great play because it's a highly scalable model, and they can take it globally as well. It's just these numbers are a bit disappointing. One needs to dig a bit deeper and understand what has gone wrong this quarter. Last few quarters have been exceptionally good numbers, and valuation also, I think, is on the higher side. But given the business model and the growth prospects, I think a bit justified, but I need to see the numbers more closely and see what the management has to say.
All right, that's a view on rate gain also coming in. By the way, a couple of stocks that continue to be on the move include some of the other PSU names as well. I mean, we've mentioned RVNL, which is, of course, reacting quite well, perhaps to the orders of more announcements coming in for the railways. Orders worth about 25,000 crores. I mean, those are cabinet approvals that have come in over the last week. The others include Suzlon Energy, that's having a good afternoon. There's also some of the names like Granules India. So these are price along with volume actions that we are seeing today. Deepan, good afternoon. So railways is interesting, right? I mean, the stocks are off the peak, but on every dip, there is at least some buying or the other that's coming in. I know you've been a little cautious on this space. Would that be the approach now? Would you look elsewhere in the market for opportunities?
Yeah, good afternoon. So the reason for cautious is the high level of valuations. And end of the day, these are brick and mortar businesses that still need to execute and deliver. And it's not always a smooth sailing for such companies. But the valuations at which they're trading at just now are exceptionally high compared to historical levels and compared to what the potential is. Agreed, there's a great deal of visibility when it comes to the earnings because of the high level of orders. But I think that a lot of the positive news has been factored in. And if you're waiting for a deeper correction, if at all, to buy into these companies, all railways and defense stock, I think similar kind of a view is what we have at this point of time.
Okay, fair enough. Let's ask you about another stock, which has been doing really well. I mentioned that at the onset as well. Voltas, almost 10% higher after results, which obviously the street is really liking because while the unitary cooling products business has done well, even the other engine seems to be firing away this quarter. We have Upasana joining in with more details. Upasana, tell us what has worked so well for the company this time.
Thanks so much for that. Voltas reported strong set of numbers in its Q1 FY25 above street estimates. Strong growth was mainly driven by the company's UCP segment, which is nearly 77% of the sales. EMPS segment also recovered sharply this quarter and turned positive. Now coming to revenues first, the revenue stood at 4,921 crores with an uptick of 47% on a YoY basis. EBITDA saw growth of nearly 1.3 times at 424 crore. Leading to a sharp EBITDA margin expansion of 310 basis points at 8.6%. PAT stood at 335 crores with an uptick of nearly about 1.6 times. Now coming to company's key segment, first up is UCP segment, which was the key growth driver. As stated earlier, recorded a strong revenue growth of 51% on a YoY basis, and margins in this segment also expanded by 40 basis points at 8.6%. Company's EMPS segment turned positive and revenue growth was about 40% on a YoY basis and margins turned positive at 7%. And lastly, company's engineering products and services segment saw a revenue growth of about 13%, but margins declined by 100 basis points at 28% on a YoY basis. So all in all, strong set of numbers reported by Voltas in its Q1 FY25.
Well, it's a cool move higher in today's trading session, and that's Voltas for you. Dipan, what do you make of these numbers? as Upasana said, these numbers are good, and the positioning getting into these numbers actually was weak. There were a lot of short positions that did, get built up in the last 2 or 3 sessions. If you look at it, now the stock had seen a sharp correction of around 100 rupees, and that's the point we mentioned earlier today as well. Your view at around 1,580 rupees.
Yeah, Nigel, along with the numbers, you should also display the trailing 12-month price to earnings multiple. And I just checked, it is 211 times. So that's the irony over here, that these are great businesses. They got good visibility. And look, air conditioning no longer is no longer a comfort, it's a necessity. And it's a nice secular growth story. But look, at 100 plus P multiple, how can you justify buying a stock like Voltas? I think the better way to play this entire investment theme is through these contract manufacturers. I thought PG Electroplast came with exceptionally good set of numbers and reasonable valuation. And even within the AC space, I thought Blue Star, which has been a consistent performer, even when the entire industry was going through a downturn, they managed to increase their market share. And they also have a reasonably high exposure to the projects business. So my preference would be for Blue Star, which is slightly trading at cheaper multiple than Voltas. And these are the two ways I think PG Electroplast and Blue Star are better ways to play this entire boom which you are seeing in the air conditioning industry.
Okay, that's Voltas having an excellent session. By the way, ONGC is surging away, and our colleague Sudarshan is pointing out what the possible increase seems to be, because something that was a recommendation earlier is now finally happening. Look at that massive spike on ONGC. Basically, the Kirat Parekh committee had recommended that for fields which are more difficult in nature, where exploration is far more tougher and more strenuous, probably involves more investments as well, the gas pricing or the allocation should be a premium over the administered price mechanism, the APM mechanism which is there. So these difficult fields will fetch ONGC 20% more. At least that's what the reading seems to be, going by the alert that Sudarshan has put out. Let's bring in Deepan in on this as well. ONGC has had a very good run, Deepan, in the last couple of weeks. And now we're seeing this big surge on the possible news. What are your thoughts? Do you like the story here?
No, Surbi, end of the day, if you see 15-20-year chart, volume chart of ONGC is really gone nowhere. And, of course, the stock price goes up and down depending upon the global oil prices. And now there's a new element of uncertainty that sometimes there is windfall tax also on oil producers like ONGC. So I think that the entire story doesn't really appeal to us. And it's a great commodity stock. You can buy when things are really down and the valuations are at throwaway, but they're not at this point of time. So I would just give ONGC an avoid. Of course, they need many more such regulatory changes for it to get the true potential out. But, that's a matter of conjecture whether it will actually happen. But I would say best to avoid ONGC. There could be a trading rally at any point of time, but as long-term investors, for us, it's an avoid.
Deepan, but what's the thought on this big story about Hindenburg and what the latest allegations are? Today, the markets have brushed them aside completely and moved on. But do you think it's a concern amongst investors? It's a story which will come back again in different, in a different format and hurt the market?
No, I don't think so. I think whatever reaction was there is over and done with, and it will be easily forgotten, this news, over the next few trading sessions or so. I think it will not have any material impact on the sentiment or the stock price movement or even whatever the regulator is supposed to do.
Deepan, Ola, 20% on Friday, day one, 20% today, lot of demand.
Well, it's a bull market, Prashant. What can you say? I think there's great demand for concept stocks. And these stocks are being, just bid up higher and higher. I thought it was fairly valued when that came out of an IPO, and it is, I think, 40% higher from there. So what can I say? It's a missed opportunity. But I don't think it's worth chasing this company at these levels. I think let's just wait for the dust to settle down. Let them announce 2-3 quarter numbers, see what the road to profitability is, and then make a perhaps more informed estimate of what the value is. At these levels, it appears to be overvalued.
I think on 15th of August, they have a bunch of announcements lined up. I think the motorcycle, I don't know if you'll hear, the announcement on that front. So far, it's all electric scooters, but in the motorbike as well, they've sort of stated ambition. And will they unveil something, show something to the market? I'm not sure. But it's been a, 20% on day one and 20% today as well. So it's a pretty large one at that. Amara Raja is another one I want to talk about. We'll play out sound bites. Our colleague Jude traveled to their gigafactory. And it was not just actually Amara Raja's EV head. There was a promoter of Amara Raja there as well. But a bunch of other sort of industry, there were policymakers, there were companies like Neogen Chemicals, etc., who attended, who were there talking about battery chemistry, etc. So why don't we actually quickly play out that soundbite, and then I'll come to you on this one.
The facility we're in today is our pack facility that we've inaugurated the phase 1 of. This facility today houses about 1.5 gigawatt hour of pack manufacturing. And today we have our 2-wheeler and 3-wheeler lines up and running. And eventually this facility will house about 5 gigawatt hour of pack manufacturing. This facility, I think, is largely catered to light electric mobility, which we're very bullish on. We think that the trends of electrification in 2-wheeler and 3-wheeler, they may kind of, they may slow down at times, but mostly we don't believe that these segments are going to go backwards. I think the electrification route is clear. It's unidirectional. We are seeing a lot more, movement on the passenger vehicle side, little less on the penetration numbers, but definitely we are quite bullish that India will adopt the EV story, especially because I think for our cost points, we're a very value vehicle minded country, and some of the brands that have come in and been able to crack, that price point and the kind of the features, it's definitely going to go up, and we feel that we're in a good position to capture that. Aethers, they have a huge amount of data and user experience that they have from all the bikes and the kilometers they've traveled, the number of packs and cells they have already installed in the market. So a lot of that is going to be made available to us to exactly spec the type of cell that they feel is going to be most relevant to succeed in the Indian road conditions. And by the time we start manufacturing our cells here, I think we'll have a very good design, and we'll be able to give that to Aether to start and many other two-wheeler manufacturers. With Piaggio, we are working on, actually it's a pretty expansive relationship we have with them. We started about a couple of years ago. We started with packs and chargers, and now we're into, a second or third generation of pack. Next generation of charger is just coming off our lines in a town called Diguvamagam in Andhra Pradesh. And what we've agreed today also is, in addition to this firm fixed business over the next few years, also localizing cells inside these packs is now on the anvil.
For us to have access to that supply chain, government, that's a bigger role that the government has to play. On the one side, giving us some incentives and hand-holding is good, but on the other side, actually going out and securing the supply chain the way the Chinese government has done for their companies, or by incentivizing us to go and do that, would definitely help, and I think it's required also.
Right.
If you look at it today, China doesn't own 80% of the minerals, but they're processing 80% of the minerals,
right,
regardless of where it's coming from. So that's all because of the way the government has moved.
All right, that's a word from Amara Raja's top management as well. Deepan, thank you very much for being with us today. Good to have you on as always. Markets are holding on to a 50-point gain. We'll take a break. On the other side, Nikhil Rungta of LIC Mutual Fund will weigh in on the way they are constructing their portfolios in the current environment.
Welcome back. The momentum is fading now in the market, so flattened out completely on the frontline indices. The Nifty is now below 24,400. The sensex too has dipped in the red. It's down close to about 6 points. The stock in focus is ONGC, as the government has notified the increasing price for allocation of gas from new wells. Sonal joins in with the details. Sonal.
Thank you for that. Now, just to give you some perspective, last year in April, Kirit Parikh committee came out with new gas pricing formula that was for APM gas, and in that particular notification, they had also indicated that gas prices from new wells would be 20% premium to the current gas pricing. So earlier it was announced, and now ONGC says that government has gone ahead and notified this particular gas price increase, so they will be able to charge 20% higher than the current APM gas prices. Now, allocation, they also say that the current APM prices, which are capped at around $6.50 per MMBTU, they will see an increase. That is something that was there in the notification earlier as well, that ceiling will be maintained for FY24 and FY25, and once these financial years get over, there will be an addition of $0.25 per MMBTU every year from the next year. So from April 2025, we'll actually see increase in gas prices further. Now, Jefferies had indicated on ONGC last week that premium pricing of gas from new wells in nomination fields or the new fields could lead to an increase in 14% in terms of volumes and realizations as well. So this is definitely a positive for ONGC. And remember, as per the conversation that we had with the company earlier, they had indicated that 8 to 10% production gets added from new wells by ONGC every year. New wells will see a pricing of around $9.5 to $10 per MMBTU, but that of course also depends on the current crude prices. Old wells will get replaced by new wells to a large extent in the next 3 to 4 years, and that would mean premium pricing on maximum of their volumes. So this is a positive, and this has finally been notified for the company.
All right, Sonal, thank you very much for that. That's ONGC in focus, stock spiking. We should actually also put up the stock of Oil India. That's the other sort of lesser talked about name, but of course, I mean, equal sensitivity to some of this stuff. There you go on your screen. It's actually a bigger mover, 4.5% higher at about 672. Nikhil Rungta is with us, Co-Chief Investment Officer at LIC Mutual Fund. Nikhil, good afternoon. Great to have you with us here. Nikhil manages the large cap fund, he manages the flexi cap fund, he manages the small cap fund, amongst others. Nikhil, let's just begin. A quick kind of sort of snapshot view of what has been the overall stance towards market with the funds that you manage. Have you been aggressive? Have you, as some have pulled back a little bit and are being a little more sort of cautious in terms of the kind of stocks they are picking, or even just the overall stance to begin with, Nikhil?
I'll take you through with earnings. So in our equity market, whenever we discuss earnings, receive very less focus. And if we look at the Nifty earnings, they have been growing at a healthy double-digit growth rate. In fact, if I compare it with last year, our small and mid cap number was explain the outperformance of our been some amount of catch-up effect, like from 2018 to 22, our small and mid-cap indices have been underperforming large cap, so that's happening. The second focus is on valuation. I believe the large cap and small cap indices are current fair value. What we mean here is median 1 and 2 year forward PE levels of the last 10 years. So contrary to the popular perception, we do not think that the valuation is a key challenge here, especially for the large and small cap segment. Even for mid cap, it's only some 15 to 20% of your constituents, which have a very high multiples, leading to the entire index being at a higher level. So we believe this rising equity allocation by the Indian household since 2016 is a strategic and structural change, and these flows would also continue. Valuations are largely in line with expectations or better than expectations. And lastly, lot of new themes are getting captured in the market now. So these things are definitely there. And we believe that flows are now chasing mid and small cap outpaced sectors have surpassed or approaching multiples of large cap. So in the near term, the risk reward for large cap might be favorable compared to the mid and small cap. But this is a market where you focus on quality over momentum, you focus on reasonable valuation over expensive valuation, and you focus on diversified and market discovered prices rather than low floating stock or very, very low holding. So, in within a year is anytime given, given any of the triggers, but we are positioning more toward quality, reasonable valuation, and diversified ownership right now.
Okay, all right. Hi, Nikhil. Good afternoon and good to see you in. This is Nigel on this side. So clearly you're sounding quite bullish. And you believe that maybe the markets are trading at these levels with good reason. Let's focus on a couple of plays then. And these stock market related plays, some of the exchanges, the depositories, brokerage companies as well, they have done very, very well in the last 12 to around 18 months. But now there's a lot of talk from regulators talking about, trying to slow things down. What's your take on the stock marketplace? I'm looking at some of your portfolios. I think you'll have BSE that's part of it. But how would you approach these themes? Because clearly the here in India. So your take.
So we definitely are bullish on this financialization theme. And we are bullish depositories. Right now, the broking players, given a lot of regulatory things coming into the picture, we would like some dust to be settled there before venturing into those kind of bullish on the lower potential, specifically the likes of MFI. Of course, this is a time horizon wherein we are seeing some NPS coming up but we believe this is a matter of just a couple of quarters. So we are definitely bullish on this particular theme.
So, Nikhil, hi, good afternoon, Surabhi here. So that's on the capital market related play. Significant exposure to banks, whether it's an HDFC Bank or Kotak or even SBI, Federal. So it's cutting across ownership, private and public, as well as across market capitalization. There, because the naysayers have been really talking about a lot of concern, the fight for deposits, maybe compression in margins, and now maybe we won't get the rate cuts that were earlier being projected and forecast. So how do you put all of this together? And then sort of what's the return expectation that you would have, given that banks have at best been market bigger names?
So as of now, we are playing slightly at a defensive. Banks have been at a higher weight in our portfolio. Our July portfolio is also up on the websites, and if you see that we have cut down our exposure to banks, and we have increased our exposure primarily to the likes of insurance and BFCs, where we see more or better opportunities compared to banks. So we would like to play financials via non-lenders, specifically insurance, and there also fundamentally what we are seeing is more exposures toward NBFCs over banks.
Nikhil, you don't have too much exposure to, for instance, defense, shipbuilding, or even railway. The only stock which I can see across in the key holdings for your portfolio is a Texmaco Rail. So have you intentionally kept away? Have you missed the rally? What is the thought process?
No, so in terms of PSUs, I'll put it this way, like we have good exposure to capital goods and industrial space. If you look at our small cap exposure to capital goods, I'd like to draw your attention primarily to the emerging themes like manufacturing, EVA, some better played or captured in mid and small cap space. And if I talk about large.
Okay, I think we lost.
Toward that thing. Yeah, hello?
Sorry, go on, please. We think we lost the signal. Yeah, go on, please.
Yeah, so specifically in the cap goods and industrial space, we like railway, we like T&D, defense, and engine manufacturers, theme increment. July portfolio, there are a lot of changes which we'll go through, and would have been answered through my July portfolio.
Nikhil, we'll just stay on. We'll take a final roundup thought from you in a moment. But since you mentioned insurance, and that's where you're increasing exposure, maybe cutting back a little bit from banks, good time to go across to our colleague Yash, because he has been looking at the life insurance data that has come out for the month of July. So let's go over the trends. Yash.
Well, Surabhi, it's been a good industry has grown its premium by about 14%. Though in this month, the private life insurance companies slowed down the pace a little bit, growing their premium at about 7%. But if you speak about individual companies, HDFC Life Insurance in the month of July, that is the previous month, showed a very, very strong growth. But there's a little caveat here, and that is that strong growth for HDFC Life has come on a favorable base. So as far as total premium for the company is concerned, that grew at 34%. Total AP grew at 49%. 8%, but do remember last year in the month of July there were these parameters. ICICI Pru Life, it's a moderate growth over a strong base, total premium growing at 7%, total AP growing at 4%, retail AP growing at 40%. Max Life Insurance, to me, as the numbers look for strongest July, total premium growing at 28%, total AP growing at 38%, and retail AP growing at 45%. This comes despite having a strong base. So good month for Max Life Insurance. SBI Life Insurance, it's a weak growth over a strong base. Total AP contracting by 26%, contracting by about 9%. Total premium contracting by 26%. Retail AP contracting by about 21%. Finally, LIC, it's a moderate growth over a weak base. Total premium has grown by 20%. Total AP growing at 14%, and retail AP for the month of July 2024 is flat for LIC.
Okay, all right, Yash, thanks very much. Got that. Nikhil, so final roundup, you mentioned some of the names on the BFSI side. Anything else? Any new ideas that you're liking at the moment?
So we like the consumption, pharma, insurance, and power segment. Discretionary consumption, we believe, is a structural growth opportunity, and many companies in this sector are expected to experience good compounded growth over next decade. Government policies like PLI are encouraging our manufacturing sector, and strategies focused on import substitution and export promotion is leading to these Indian manufacturing rising across the board, and specifically the likes of power, real estate, renewable energy, and water. These themes or rising capex in these segments significantly enhance opportunities across the board, specifically in small and mid-cap space.
Thank you. Great conversation, Nikhil. Look forward to more such. That's Nikhil Rungta from LIC Mutual Fund. Slip into a break. We'll come back and get you a check on what dealing rooms are saying in our segment, the Street Chatter. We also get you calls from our technical experts.
Welcome back. Well, it's that sort of a day, right? Buy the dip has worked and sell the rise as well. Both of them have worked. And as we speak, the Nifty is actually in the middle of the high and the low of the day. But Nimesh joins us to give us an insight into dealing room chatter. Well, Nimesh, it's that sort of a day, you know, a bit of consolidation. It was good to see the dip getting bought into, but some nervousness at higher levels.
I guess the nervousness at the high levels is only because there is supply and there is a large sell basket is what I understand at a leading FI desk. Maybe that explains, you know, that the top got sold into as well. But what the good part was, we saw a good recovery from the intraday lows, and I guess there is a bit of retail support as well, which is and again, you know, the broad sense I got is that markets don't fall on same reasons again and again and again. So I get that clearly got you know, in the kind of reaction you saw in the markets today, not only in Rani Group stocks but in general for the overall markets as well. I guess you know, we're seeing a very sharp reactions to earnings for this quarter, and that's going to be the trend, right? And we've been saying this for a while now that watch out for big reactions in earnings. Today, classic example, Suntev is down 10%, Voltas is up 10%, Jubilant is up 9%. So I guess that's the kind of market we are in. We'll see very sharp reactions to earnings. But the big trigger to watch will be the MSCI rebalancing, which will get announced tonight. India markets will get to react tomorrow morning. There are some individual names which will get impacted. I guess the biggest inflow is going to be in Vodafone Idea of nearly $280 million. But in general, net, I'm told there could be an inflow of close to $2.5 or $2.6 billion. So I guess that's one big trigger to watch out for as far as the MSCI rebalancing is concerned. I was at the conference, Nigel, and you know, while everybody seems to be quite cautious at these levels, you know, markets are at high levels, valuations are not supportive, but the amount of interest that I saw in mid-cap and small-cap stocks, the amount of meetings which are lined up, one of the guys in MK was sharing with me, the sales side guy, that there are some 6,700 meetings lined up in 3 days.
Wow.
You know, so that's the kind of interest which is still there for Indian markets and for the broader market stocks. But there is a bit of caution out there from larger investors, but the interest seems to be quite high as far as India is concerned.
Okay, all right, let's get to individual stocks, then we'll be waiting by for the MSCI rejig announcement. But what about other stocks? What are you picking up?
So in terms of individual names, the first stock is ABB, a bit under pressure today, largely on back of profit booking. But I understand there's going to be a clean out trade in ABB very soon, so watch out for that large block in ABB soon. The second name is Sun TV, down 10%, but there is large selling as well, is what I understand. There are multiple downgrades as well. So Motilal, Kotak, all downgraded the stock trade on back of weak quarter one. So compared to Z, it was a very weak quarter for Sun TV, and hence a big reaction on that stock. The third name is Skipper Limited. The numbers were decent, but again, I understand the company is likely to raise funds via QIP or via pref issue very soon. So there could be a large fundraising in Skipper Limited going forward. And the last is a couple of large blocks or fundraising. So Bharti Airtel is something to watch out for. Again, there is a very strong buzz of or indication of a large block coming in Bharti very soon, and also in Hindustan Zinc. So while there were reports of government looking to sell stake by OFS, but I understand before that, Vedanta the promoters could come and do an OFS very soon in Hindustan Zinc.
And Bharti is that the overseas stake, right?
The largest, the large shareholder, yes, Prashant, the large shareholder. Basically, it's been quite reported now that it's Singtel who's looking to sell a large stake in Bharti Airtel. So that's been long pending. There is a very high chance that could happen in a day or two.
And that MSCI list is coming tonight, Nimesh?
It will come tonight, yes. It will come tonight.
Yeah.
So India market will get to react only tomorrow morning.
Yeah, absolutely.
Okay. All right. So lots going on, including those meetings that Nimesh spoke of, a large number out there over the next couple of weeks. Thank you for that, Nimesh. Let's go back to Mitesh. The market, by the way, has suddenly changed color again. You can see that dip that's come through, about 18 points lower on the Nifty. Let's just take a look at where the weakness is sort of coming crept in from. Not too much has changed. Maybe some additional selling on a couple of the biggies like L&T, Reliance. So there's a shade of red over there. There's SBI as well, which is not playing ball like some of the other private sector banking names. So that's where the L&T is seeing a sharp cut there. So some of those big movers there leading to this 20-point dip now on the index. Mitesh is back with us. So let's quickly get some final trading calls in. Mitesh, slightly volatile day, choppy day. What would your advice be?
Yeah, so I have a STBT on Bandhan Bank. I think that's turning weak, and sell here with a stop at about 200 for targets of 192. And a BTST on Voltas, you know, that's obviously has been buzzing, and the numbers were good, so everybody is discussing the stock. But keep a stop at about 1575, look for targets of 1610.
By the way, I don't know if you guys read about it, that Bharti Enterprises, which is the parent company of Bharti Airtel, will be acquiring a 24.5% stake in British Telecom. So that's fairly significant. It's, the fact that the promoter of Bharti Airtel will be acquiring that stake. And life comes a full circle because earlier it was BT. That's, British Telecom had a 21% stake in Bharti Airtel, I think, many years back, 2 decades ago. They had bought seats as well. And now it's the turn of the Indian entity acquiring stake in a marquee global telecom major. That's BT Global. That's Bharti Airtel.
For that matter, Vodafone, right, when they came in. I mean, not Bharti related, but I mean, large UK company.
Coming in, and now it's the reverse, right? Now it's the reverse that we're seeing. Let's talk about Jubilant Food, because that's a company which is surging. Very strong set of Q1 numbers, stands ahead of peers. Mangalam joins in with the fine print. Mangalam.
Well, it was a phenomenal day of trade for Jubilant Foodworks, and there are 5 reasons why the stock has done what it has done in today's trading session. The most important reason, one, the like-for-like growth. That came in at 3% at the higher end of street expectations, but beneath the surface as well. Delivery actually grew by about 12.1% on a like-to-like basis, and dine-in, which was under pressure, has actually seen a recovery quarter-on-quarter. And this at a time when all the other QSRs, the quick service restaurants that you have, be it Westlife or Pizza Hut or something like even KFC, has seen a decline anywhere between 6 to 9% in the first quarter itself. This 3% up move actually is a bit of an outperformance. Add to that, we have, the overall reported numbers also, if not marginally better, at least in line with street expectations. Right from the standalone top line to EBITDA around that 280 crores to about the net profit, which came in a little above 50 crores as well. That's a positive. The third most important reason, they continued their expansion. So Domino's, they added about 34 stores this quarter. They added non-Domino's stores as well, the kinds of Popeye and Hongs. So that piece is doing well. The fourth important reason is that while that piece is doing well, the business that they acquired from Turkey, DP Eurasia, is doing even better. So we have, Domino's Turkey, which showed about a 10% growth in same-store sales growth, along with the coffee brand, which did extremely well with 7-8% growth out there as well. So all of these factors put together, along with the stock having underperformed over the last 1 year or so as compared to the other parts of the market, the street believes that maybe the worst is behind Jubilant Foodworks from now, and as a result of which we saw a couple of brokerage upgrades coming in as well. Most notable one coming in from Jefferies, which has a target price of around 850 on the stock.
Okay, well, Mangalam, thanks very much for that. People have been waiting for this turn in QSR, and of course, Jubilant is the biggest one by far in that space, and seeing a reaction after those numbers nicely captured. Well, let's get you some important market opinion. We had Madhu Khela, founder of MK Ventures, speaking to us about what he's making of this market from here on, and what he'd like to sort of bet on, what he's comfortable with. Listen in.
From an investor perspective, because of this event, and I'm very vocal, very clear, I'm not mincing word, I think because of this event, I don't think investors need to worry at all. I don't think this is any event which will destabilize India or destabilize the market, or there is any risk to market because of this event. We have had a tremendous gain in the market in the last 3-4 years. Even at the index level, the CAGR is more than 30%, right? Individual, lot of companies have gone up 1, 3, 5, 10, 20 times from the COVID low. So first thing is, you cannot extrapolate what has happened in the last 3 years, right? When you are even investing for a long term, your return expectation has to be very, very moderate. There is clearly discomfort to even an optimist like me in certain pockets, right? So if you are investing in mutual fund, you do your homework, invest in good mutual funds with a track record, no issues at all. But if you are investing in individual companies, you should definitely be watchful of what you are paying, what you are assuming, and then what is it that the company will deliver, then you make money. We spoke about the liquor sector, which looks like a structural long-term story. So I think there is enough, and someone like me, I am always open to an idea, but I am also not hesitating in this kind of market to sell companies.
Welcome back. You're tuned in Closing Bell. You're on CNBC-TV18. Well, Stovecraft as well as Inox Wind, both of them are buzzing in trade on the back of a solid Q1 performance. We spoke to both managements earlier today. Let's listen in to what they had to say about the quarter gone by and their guidance for the year ahead.
We are seeing growth in gross margin, and we believe we'll continue to grow and at least remain at the current level. And on the business side, the second and third quarter are the main quarters for us. This contribute the majority of the revenue for the year. At EBITDA, we are very confident of delivering 11% EBITDA this year. And on the growth, we believe that we'll be closer to a high double-digit growth.
Look, we've guided for about 15 to 16% margin for the entire financial year. And obviously, there could be a slight upside to that as we move forward. But having said that, we continue to maintain our guidance at 15 to 16%. This quarter has been close to 21%, but I think in the course of the full financial year, we should be closer to the numbers I spoke about. We've stated our guidance of being an 800 megawatt supply or execution company this financial year. And I think we are very well on track to achieve that.
All right, Mayuresh Joshi joins us as well. Hi, Mayuresh. Good afternoon. Any view on either of these two companies? Stovecraft, I recall that when they listed, everyone was very excited, and then they just couldn't deliver. Now it seems they've got, their house in order. Their growth is better than what some of the peers have done. They're talking about better margins. And if growth comes about, then the ROEs will improve. Similar is the case with Inox Wind. They said they're going to be debt-free. They're debt-free. That's why they said that the net profit doubles from the coming quarter itself. Your take on either of the two?
Afternoon, Nigel. No, I think it's very positive, and I was hearing the Inox Wind management earlier on your show. Obviously, the targets that they have set out, 800 megawatts for 25, 1200 megawatts for 26, the interest component has gone off significantly, which means the profitability should show drastic improvement in the next few quarters in the next financial year as well. On top of that, they are sitting on a very sizable order book, which should keep on increasing over the next few quarters as well. So in terms of the quarterly run rate and an annualized run rate as well, they should be clocking far better than what the industry might probably do. And therefore, the momentum on this stock might very well continue. As far as Stovecraft is concerned, you're absolutely right. I think there was a periodicity where the earnings were very, very patchy. But the expectations in terms of discretionary spending expected to come through, specifically for semi-urban and rural areas with a better monsoon this time around, will lead to better volumes as we head into the second half and even better numbers as we head into the next financial year. With pricing remaining in their favor along with better volumes, input cost inflationary pressures that we've seen in the past should largely stabilize, giving them the operating leverage benefit as well. So yeah, it seems to be the case that discretionary stocks and large part of the market will probably move a tad bit higher as far as earnings is concerned. So would remain positive on Stovecraft post the numbers as well.
So today is really a day of sharp reactions. I mean, either on the way up or on the way down. Stovecraft is on the way up. Mayuresh, I just quickly, there's also Sun TV. Stock has reacted so negatively to the numbers, right? I mean, of course, it's a weak quarter, ad revenue, subscription revenue. None of it's looking great. Stock's down 10%. And then there's Jubilant FoodWorks because the pizza is finally tasting nice, I think, once again. Any quick thoughts on either of these if you track them?
Yeah, both of them should be afternoon to you as well. Yeah, Jubilant, I think, decent set of numbers. So I think the analyst community now believes that the worst is probably over. Is this a turnaround quarter? Because the LFL for Jubilant at 3%, the delivery of LFL is 12%, far better than their peers, except Burger King, which had a positive number. I think all the other players had a negative LFL. So to that extent, the store additions that they're probably doing, the management commentary in terms of both the enterprise business as well as the retail-oriented business expected to do well, augurs well. And probably, I think there are a lot of events lined up in the second half as well, sporting, non-sporting as well, which can probably get volume growth. So to that extent, yes, it seems to be a turnaround quarter. If they're able to consolidate in the coming quarter as well, there would be a definite rating. Obviously, valuations is a totally different subject matter. It is richly valued even at this juncture. But yeah, if they're able to produce numbers, some re-rating might be around the corner for Jubilant.
Okay. All right, Mayuresh, just stay on. I think we just have last couple of minutes to go. We'll close this round and then come back to you with some more questions and some more thoughts in. But as we're winding down, it's been sort of a very interesting day. Choppy, the market had a lot to digest in terms of all the news and the noise over the weekend with this Hindenburg latest report. There's some flashes coming in from the RBI, by the way, announces constitution of an expert committee on benchmarking of its statistics. Okay. That's an RBI news update. We'll get you more on that in just a bit as well. But otherwise, for the market, it's been a very interesting comeback from the, as I said, news and noise that was playing out over the weekend. But we've had some final earnings coming through. Remember, tail enders coming through as the earnings season wraps up. So all in all, put together, at the index level, it's been consolidating today, this Monday. But at an individual stock level, there's a lot to tell, many stories to tell. On the large cap screen, so let's start winding down. ONGC 2.5% because of the news that came in on the additional pricing that they'll get on some of their more difficult, more sophisticated fields. That worked very well for the stock, 2.5% up. Hero Motors reporting numbers tomorrow, 2% higher. The index heavyweights that batted well, Axis Bank, Infosys, Tata Motors, HDFC Bank. So these were the stocks on the upside, Kotak Mahindra and ICICI included. These were the banks that supported the Nifty. But on the flip side, Adani Ports are down about 2.5%. Some of the other Adani stocks as well actually had a little bit of red around them. Adani Enterprises, for instance, was down about 1.5% as well. Beyond that, NTPC, Britannia, Dr. Reddy's, Nestle. So these are the other names, largely FMCG Pharma, which was a little out of favor. But Prashant, I guess it's really mid-caps, small caps, basically, news-based stocks which took away the headlines today.
Absolutely. On both what was up and down on both sides, because, I'll just sort of give you a flavor, 5 up and 5 down, and you see what I'm talking about. So LIC was a big loser today. Numbers came on Thursday post-market hours. Friday morning, we spoke with the management, but the reaction comes today 5% lower. There was Sun TV, which was a big casualty, earnings disappointment. Astral was a company we spoke to on Friday morning. Again, numbers were a little soft, and the market punished it. RateGain was a loser, and the numbers came in the last hour of trade today. Medanta, again, earnings came over the weekend. Midhani, a big margin compression, so lots of single stock reactions here, right? On the upside, Ola for the second day running 20%, lots of bids there, 40% since listing. So that's a pretty large one. Voltas, actually, two names where generally there has been a bit of a lackluster. There's been no enthusiasm. Has been Voltas, different sectors, but it had a big update today, 11%. The other, of course, has been Jubilant Food Works. Although from 550 levels, which is the recent low, it's come up to about 650. So it's not as if it's the reaction only came today, but it was a big 8% kind of move. Apart from that, Inox Wind was another one, big gainer. We had the management. We played on the soundbite just a while back as well. Amara Raja was a big news-related mover. Again, we had the management, and we sort of got that for you. Inox Green was another sort of big mover. Everready, Stovecraft, another company you heard from early in the morning here on the channel, and so on and so forth. So, really not so much about the index, which ends pretty much flattish, 24,345, but really about individual stocks, and there were lots and lots of movers through and through. I think that gets us to a wrap with this edition of Closing Bell. From all of us here, it's goodbye. Thank you very much for staying with us. But markets forward is coming right up. Surabhi and Nigel will take you through that. Stay with us.